Good morning and welcome back to the channel. Today we're going to be looking at a company which is involved very heavily in how the mutual fund industry operates. And mutual fund industry is really taking the financial planning of a lot of Indian households by storm. We have a very young median age of 28 years across India, and a lot of them are being added to the working class. And even with the new data that came out on the number of EPFOs that were being added, shows that a lot of people are entering into the workforce and are also aware about the financial planning and beginning to plan their savings and those kind of things very early. And something that they're turning to with a deviation from what they were turning to earlier, from fixed deposits and traditional forms of investment or physical assets that there were. They're turning to mutual funds, and in a big way they're allocating a large chunk of the savings into the mutual funds. And we're going to be looking at not a mutual fund company or not an asset management company, but we're going to be looking at Computer Age Management Services. This is a company which is a mutual funds transfer agency. It provides investor service, distributor service, and asset management company services. So in a way, it is India's largest registrar and transfer agent of mutual funds with a market share of close to 69%. The other competitor that it has is Kavi Financial Services, Financial Technologies, and that holds the remaining percentage of the market share. But really, it's a duopoly right now. And one thing that is not going for the industry is that the total expense ratio keeps on coming down. Now, SEBI would always be on the side of the consumers or investors, retail investors, and hence the TER, or which is called the total expense ratio, has been constantly dropping since 2017. It's been dropping at a phenomenal rate. So if you look at the TER that is being charged right now by the RTAs for equity funds, is 0.062%, and it's also in a tiered structure. The higher the fund management, there is a tier to these percentages as well. So you, for debt, you can see is 0.022%. So since 2017, so this data is at FY20, but since 2017, this has been undergoing some sort of pressure. So this is very important to keep in mind, because uh, we will see later on in the investor presentation that 72% of computer age management services um, business as at FY24 came really from um, mutual fund businesses, and the 28% were from non-mutual fund businesses. It is also becoming more of a technology company. It's getting into KYC. It is becoming a insurance depository. So insurance depository can be a big opportunity, given the fact that right now not a lot of traction is being generated by it. But if if there is a push by regulator and a huge digitalization drive does come in, which I think it eventually will, and computer scams is holding 40% of the market share on insurance repository. So the market potential for that is around 1400 crore, and given CAMS is 40% um, stake within it, there's a huge opportunity which lines up for CAMS as of now. So if that is just a market segment, the revenue that the company is generating is close to 1100 crore, and that in itself in the future times can be a significant part of how CAMS is generating business. And this is just one part of the business, right? So here, as you can see, that the non-mutual fund is 73%, MF non-assets based is 14%, and MF assets based is close to 13%. So um, this will be interesting. You see also the fact that the revenue model is constantly being churned and undergoing changes, and it also came out with eKYC. So it's providing eKYC services to a lot of financial sector and PSUs and the likes, and that in itself is generating a lot of revenue for them. So here, as you can see, this is CAMS CRA. This is a CRA platform on cloud to offer multiple KYC options. So they are taking KYC to the cloud, and so not only it's not only serving as a repository, but also being able to penetrate because of its huge experience and also the duopoly nature of the business. It is moving fast. It is not celebrating its achievements, but it is moving fast and adding on to the plethora of armor of business services that it already has. So it has also got into AIF and PMS with a company called WellTrack, which has built analytical platform WellTrack and WellTrack 2.0. So the company service 150 plus fund houses, and it has managed 2 lakh crores with 400 plus fund service across 150 plus fund houses. Then there's also something called the CAMS Pay, which is a UPI auto pay expanded beyond MF with adoption by fintech channels and prominent third-party apps. It has a 50% market share in mutual funds ecosystem, and this is just one of the arms that CAMS has. So some of the things that are working for it is it's moving fast. The things that are not moving for it is that the TER is kind of being shaved off by the regulator, and the regulator believes that it needs to be constantly shaved off, and it has to be minimal percentage as of the AUM. So that is a downside for it. But the upside is that the volume, the addition, and we'll see that later on within the investor presentation, is of phenomenal proportions. And within from the last year to the current year, so the last 2 preceding years, it did 700 crore worth of revenue, and this year, the FY24 which closed, it did close to 1100 crore of revenue, generating 350 crore in profit, and a significant boost to the EPS. So here, as in the shadow, we can see that the stock P is trading at close to 62.7, which is on the higher side, but the capital optimization ratio, so 48.4 and 39.8% for ROE and ROCE, and the market cap is also not in the high stratosphere of 1 lakh crore, is ranging in the range of 21,000 crore, with a duopoly nature in business. So the question is, will this duopoly continue? Do mention in the comment section what you think, that will there be changes to the regulation? Will there be any addition to management services? Because also we need to understand that given the high barrier to entry that these companies enjoy, these companies also enjoy high exit costs. So if a mutual fund house is working with a RTA and it's working with computer age management services, and somehow it says that no, we've been having lots of issues with them, legacy issues, and we do not agree with a lot of terms that they have put forward, or we do not like the service, we need to move to Kavi Financial Technologies. It's very sticky because the movement in itself will cost the fund houses a lot of money, and time and effort, and will cause disruption moving from one RTA to another. So that is one very beautiful advantage that the company enjoys. We'll quickly dive into the investor presentation to see more about the business, quickly about the business at a glance. So we can see there is a technology-driven financial infrastructure and services provided to mutual fund and other financial institutions. It holds 68% market share, but very smartly, they're in very small italics, they've put in that the market share basis is 3 months average. So I haven't cross-verified as to what the long-term market share is, but I understand that they do this because the AUM is constantly fluctuating, and they would check the 3 months average to see where the market is at. So a few years ago, I think 1 or 2 years ago, we were having the market at 50,000 Sensex, and right now it's touching 80,000. So recent data needs to be looked at in terms of deciding this. So these are some of the highlights for CAMS. So it is a service aggregator, uniform regulatory change implementation, business continuity mechanism. So if you see this presentation, you will begin to realize there are more, the service part of the business is very deeply entrenched within the core business, and value unlocking, I believe, is still some ways to go for it, given the fact that it's a duopoly and it holds significant market share. It would be a reliable player if anybody would want to associate with them for any of the services. So for example, the call center services or mail SMS, so they would know the nitty-gritties, and they would be able to quickly service anybody who comes on board with them. So they would be one of the best people to associate with in terms of adding any other services. So for example, if you see the risk management services here, they would know what are the key risks, and if they're building a dashboard and dishing it out to the clients for risk management, CAMS would know exactly what to put in, what not to put in, and those kind of things. So they hold a significant competitive advantage in this part of the business as well. And these are some of the other arms that I was talking about. So easily, any company which has achieved a lot, holds a market share, tends to become overconfident and tends to not move quickly. we've all know what has happened with Nokia, and we all know what has happened with Kodak, and they did not evolve, they did not change. But this doesn't seem to be the case with CAMS. CAMS is getting into a lot of things. It's getting into wealth management, proprietary investor service, corporate investment portal, sales and business intelligence tool, business intelligence service, and some of the other things that they're getting into, insurance depository, and also UPI. So UPI for the mutual fund industry. So the services is broad, the services is well diversified. So people talk a lot about diversification within different stocks, but what if you have diversification within the same stock? This stock in itself has diversification into multiple branches, as you can see here. And it'll be interesting to see how it pans out. I feel a few of them will grow up to be large businesses, will start contributing more to the major chunk of the revenue, and the ones which don't, they will fall by the wayside, and they will be discontinued. So it's a very good strategy and something that Amazon does. So the difference between Amazon and Facebook is Amazon would get into multiple businesses. It would list businesses, and if it sees a traction on a particular business or a particular microwave oven selling a lot more because of some of the smart features, it'll replicate that and it'll launch its own product. It'll do small projects, and the ones which really gains traction, it'll scale it up. But what Facebook would do is Facebook would get into something like what was it? I think AI or something that Meta. They got into one project that they bet very heavily on, and it's 50-50, right? So not that a smarter strategy on by Facebook, but I think Amazon did a great thing, and I think CAMS is has that genetic of its business acumen close to what Amazon is doing, but obviously they are in two different industries. But the nature and the way they are expanding is quite similar. Yeah. So here we'll look at the compliance and risk management portal that they're offering. So to do with anti-money laundering services or suspicious transaction reporting. So they provide risk management services to assist MF clients in conducting diligence of their investors. And these would be in high demand because, as we know, that there's been a lot of front running being done by mutual funds as well, mutual fund houses where fund managers have tipped off people and then brought stakes in those. And so SEBI has come down heavily on them. SEBI has come down heavily on people like Sanjeev Bhasin, who have come onto the news channel and have said things. So front run things. They have given tips, and before that they have allowed leak the information. And really compliance and risk management and regulatory oversight becomes of immense importance. Other thing that also becomes of immense importance is cybersecurity. We all know what happened with Bank of Bangladesh and how money was siphoned off from some unknown part of the world in a time where Bangladesh was going through holidays for a couple of days, and they were able to send a phishing mail and extract a lot of information and siphon off a lot of money from Bank of Bangladesh. So, and this is not new. A lot of these cases do keep coming up. Recently at Oil India as well, we had um, locking of the systems and ransomware. So these things are going to become of prime importance moving into the future. So we'll quickly move on to just see the growth of the industry. So here what we see is we see the way the industry is growing, right? So what are the new highs in transaction volume? We see that in 23, the volume was around 129 million, and now it's at 175.7 million by FY24 close. So there's been a 28% growth in new transaction volume. New SIP registration has been a 73% growth. So this is what I was talking about. And do you believe this is going to slow down? If you do believe, do let me know in the comment section, and also do mention the reason why you think it might slow down. Because I believe this is not slowing down anytime soon. And live SIP is also something which is growing really fast. So live SIPs is something which is different from new SIP registrations. Cancellations are decreasing, and expiry is lower cancellation and expiry, as you can see. So people are having more faith, even if the market is down. They are being invested, and they even if it is expiring, they keep mature, keep expanding the term and those kind of things. So they are having the disposable income to hold it for longer periods of time, and that becomes of prime importance because companies which are sitting in Dalal Street, or companies which are financially involved in how the mutual funds operate, they would want their customers locked in for a long period of time because the charges will keep coming in for them, and they will be locked in. So that is of prime importance, that how long can an is an asset held, and that will determine revenue generation for the business as well. Although the TER is decreasing, but if this period goes on increasing, because what will happen is market may be up or down for a particular period, 1 year, 2 year, but over the elongated period, the AUMs will keep rising, and as the AUMs rise, the expenses on these AUMs will, although it a small percentage, but because the AUM has been growing at a fast pace, they should hold the business in good stead. So as we discussed, CAMS has 68% market share based on yearly asset under management. Net flows into equity assets increased by 68.9% in FY24. That's huge, 68, 70%. Inflows through SIPs increased by 32.4%. So these are definitely two of the asset classes which Indian households are turning towards. And when we see the asset under management service by CAMS, so 33 lakh crore is something that they have, and out of which 16.4 lakh crore is in equity, and the others would be debt and the other kinds of things. So industry AUM is 49 lakh crore, and equity AUM is 24 lakh crore. So yeah, let's see how high it goes, but it's been growing at a rapid pace. And anything that is not held here, the balance belongs to Kavi Financial Technologies. As we know, as we discussed, that there are only two companies which handle this business. So we look at some of the operational metrics FY24. So the transaction volume close to 600 million. It's increasing year on year by 29%. So all these things increasing. I think SIP book 48.5 million trillion, 48.5 million. So 37% rise, and so everything is rising here. So we'll quickly, I think, jump into the numbers. I think the stock PE is trading close to 62.7%, but given the high rise in the volumes of the business, is it justified? I feel it's fine, it's justified, and I think they should correct going ahead because the revenues itself have jumped from 7,000 to 1,100 crore in FY24, and I don't see any reason why this should slow down. So the PE should correct. The forward-looking PE should come down to 40 to 50 range, or even lower, depending on how the volumes and how the faith of the investors keep rising. And if there's a market crash, definitely there'll be a slowdown for a few years, I think 1 or 2 years. But if you're looking at a long-term horizon, a long-term investor, close to 10 years, 11 years, 12 years, I think it looks like to be in a sweet spot. Dividend yield is sitting at close to 1.09%. This is something I liked. So the market cap has not blossomed into TCS and Nestle level, 12 lakh crore, 16 lakh crore, where even if you double your money, you have to make the market cap. So the market cap has to move from 16 lakh crore to 32 lakh crore for TCS. So everyone, I think a lot of mutual funds would be invested in all those big names, but we know that in the 1990s, Singhanias were the biggest stocks, and Hindustan Motor was the biggest stock. Where are they now? They are nowhere now. So what people say that large cap stock has low risk and this and that, really, do they? I think understanding the business becomes really important, and because money is really being the capitalistic nature of financial world is such that supernormal profits would be eaten away. No business which is in something like car making, like how Hindustan Motor was, or conglomerates of business, Singhanias, and if they're not moving fast, they're not moving with the times, then they will be wiped out. So the price movement, as we see, I think we'll just hit the max, and I think the numbers really begin to show, and here really it's gone higher. But there's no reason why something, if it even it is an all-time high, it cannot go even higher. People can say that we'll wait for the stock to correct, but if they would have waited for the stock to correct here, um, they may have bought some stake here. But if they would have waited for the stock to correct here for even more, the prices have really shot up. So just looking at the PE ratio, now that there's been an activity in buying, so the PE ratios are beginning to rise, here. But the EPS, I think, should also increase, and then the PE ratio should normalize. The stock to book value, I think book value for a financial services company may not be the right metric to look at. Doesn't have a lot of assets or land and those kind of things. It's a technology based company. So cons really, the question mark is it still a con? It's questionable. I don't think so. And I think Screener needs to take cognizance of the fact which are, this is generated by AI. And as much as we like to say that AI, algo trading, and this and that, but this does not take matter of the fact that this does not take this into consideration, that whether it is a technology-based company or it is a factory which has a lot of assets, with depreciation being allowed at and book value, assets being low higher than liability. What are the assets of the business? The assets of the business is duopoly nature. The duopoly nature, can it get priced in? The answer is no. It can, but it will show still high on the book value to price ratios. So here we see, I think, some of the other platform-based companies. I think IEX is something which we had discussed earlier. Is trading at 47.81 PE. BSE is close to 68.71 PE. CAMS is, I think it was at 60, but the price has now risen to 62. But what is striking is the ROCE. Here we have seen 48.39%. Indian Energy Exchange comes first with 50, but there are regulatory speculation around market coupling within the electricity sector, which might see business being moved away from Indian Energy Exchange. CAM services, it'll be interesting to see what the regulator does, or does it allow concentration of such a huge market share with one player. It has been very strict in terms of the volumes and everything. So if the registrar has 1 million capacity, it has to maintain a 2 million capacity, or 2x capacity is what the regulator has said. So the regulator will come down heavily on both on TER and everything to do with facilitating the investors, retail investors specifically. Yeah. So here when we look at the revenue number, 2 years of 700 crore, March 2020 and 2021. This is when post-COVID, all work from home, and this is when everyone became interested in investing, and also a lot of workforce joining joining all the non-workforce people joining the workforce. So because they're turning from 20 to 21, people getting into the first jobs, and now people are really aware about financial planning and getting into it right at the outset. So here we are seeing good traction. We are seeing it moving to 1137 crore, and the profits then hence moving to 351 crore. EPS has moved up to 71.96. Despite of that, the price to earnings is going higher and higher. When we look at the compounded sales growth had been pretty consistent, 5 years, 10%, 17%. I think this is still yet to break out. The profit has been really good, 25%, so doubling profits every 3 years. Stock price is now in the last 1 year really beginning to take heed and of the defensibility of the business, and maybe that's the reason it's going high. Please do keep in mind, I'm not a SEBI registered analyst. Please do your own research before investing. The return to equity is in the high 40s, and last year was the 40%. So here, when we look at the shareholder pattern, 56.51% is with the FIIs. What is interesting to note is that the promoter sold the stake 19.87 to 0.00%. But you also need to realize that this is when the prices began to shoot up. A lot of people say promoter has sold stake. There can be plethora of reasons why the promoter are selling stake. They may not be able to continue providing effort into the business may still have a lot of moat. So promoter selling stake, I think, is one of the biggest myths that is there. It may be due to multiple reasons which are not related anything to do with the quality of the stock. 10%, yes, it would be, and it becomes important to analyze it, but 90% of the times it would be because of other reasons, is what I believe. But people have their own different opinion, and please feel free to voice it out in the comment section below. Yep, that's it from my side. Hope you have a lovely day ahead. Goodbye.